What is going on, my good old friends of YouTube? It is your boy Stas here. Welcome back to another video. So check it out. Tomorrow is the day that everybody has been waiting for these past couple of weeks. It's the end of the two-day FOMC meeting. We're going to get Jerome Powell, the Q&A, the press conference, all that good stuff at 2 p.m. We'll get more clarity around interest rates, the economy, whether or not the Fed is super dovish right now, hawkish. The sentiment is very important. And we're going to get more info about kind of, again, the overall economy, tapering, all that stuff. So we got a lot to break down in this video, guys. We're also going to talk about some stocks. We're going to break down some charts and some earnings. But before we do, smash that like button and subscribe if you guys want to, that is. And make sure to get your free money from Moomoo, up to 5 free shares of stock, each up to $3,500. And you have a chance of getting a free share of Twitter. Use that link down below, deposit at least $100, and boom, you get your money. And with that being said, let's get into the video. So take a look here, guys. The markets ended up closing nicely in the green today. The Russell went up 0.85% on the day, which was by far the most green index out of the four main ones that I cover on my channel, guys. The NASDAQ went up 0.1%, S&P up 0.5%, and we had the Dow up about 0.2% as the VIX went down over 9.5% on the day. The VIX got clobbered, and we had gold up 0.2% as we had silver up about 0.12%. And if you guys caught my video from earlier today, we mentioned how SPY and Triple Q, you guys can see it here on the 20-day chart, both of these ETFs, they are, we're seeing in the very short term here, an inverse head and shoulders. Take a look, especially if I zoom in, because again, it's in the very short term. Over the past 3 days of trading, we've made a left shoulder, the head, and the right shoulder based on today, but it hasn't yet completed. And based on the Fed tomorrow, I mean, we'll talk about the Fed here in a second, based on if they're hawkish, dovish, are we going to get a 50 basis point hike, which is what everybody's expecting. And, you know, of course, we're going to get some guidance and, you know, where their head's at. Based on that, if we do end up breaking out above 322, maybe 323 on Triple Q here, and mind you, we closed at about 318. If we do take that point out, I think in the short term, we could rally to at least $330 a share, 330 being that high point from the end of April, and that is where the inverse head and shoulders will complete, right? And if I pull up this SPY chart, you guys can see the same thing. We have the inverse head and shoulders, and if this does break out of, let's say, 420, you know, if the Fed seems more accommodative, I don't know, guys. We're going to have to wait and see how the sentiment is. If this breaks 420, 421, SPY could end up running to, let's say, 430. You know, there could be a nice move of about 2 to 2.5%. That's kind of what I'm seeing forming right now. But let's say the Fed comes out super hawkish. I mean, they're saying we're going to do, excuse me, guys, they're saying, oh, we're going to do a 1% or a 100 basis point hike next time or something like that, or next meeting, or a 75 basis point. If they come in super hawkish, this market's going to just dump. I mean, be ready for that. Honestly, this might take the lows out. SPY might go 405. Triple Q might go, let's see what the lows were on that. Probably what? Yeah, 309. This could easily take the lows out if they come in extremely hawkish. So they're expected to raise interest rates for the second time since 2018 tomorrow, boosting the Fed funds target by at least a 0.5 percentage point, or in other words, 50 basis points, which at this point, guys, the markets fully expect. It's kind of priced in most likely. And again, if the markets get surprised and it's not priced in, or, you know, we get a higher hike or something like that, or they're super hawkish, we could end up dumping, because that would be the unexpected. And what does the market not like? The unexpected, right? And the central bank is also expected to launch a program to reduce its massive bond holdings by $95 billion a month starting in June. So we're going to get more insight on tapering, you know, the rates of the taper based on, you know, the different bonds and so forth. So at this point, guys, it's really just a waiting game. We have to wait pretty much all day tomorrow. The Fed meeting, you know, it was today and it concludes tomorrow, and we have Jerome Powell speaking at 2 p.m. on the East Coast. So we got to wait all day tomorrow. So expect volatility pretty much all day throughout, or at least up until 2. And I mean, geez, even through 2 and into power hour, there's going to be volatility all day tomorrow. So be ready for that. And I'd love to know your thoughts. Are we going to get a 50 basis point point hike, 75 or a 1% hike, which would be unbelievable, and we're obviously most likely not going to get that. But what do you guys think? Let me know in the comments down below. And to be honest, I mean, with the inflation we have right now, the economy could use much higher interest rates. But the thing is, guys, if the Fed ended up jacking these rates up way too fast, that's going to cause a financial crisis, right? You know, their debt's they can't pay it off. Their rates are just too high, and it's just going to shock the system, in other words, right? And that would not be good. That's why they're just easing them up slowly, or, ever so slightly, right? They're easing them up. 25 basis points, 50 basis points. We're probably going to get another 50 basis points, and that's going to go up nice and slowly, and hopefully they keep it intact. And if they don't, well, all hell's going to break loose, guys. That's just what's going to happen, and we got to be ready for it. And again, I'd love to know your thoughts in the comments. Make sure to smash that like button and subscribe if you haven't done so already. We're almost at 25,000, guys. We need about 30 more subscribers, so make sure to subscribe. And let's get into now some earnings reports, some stocks, some graphs, charts, whatever you want to call them. Let's see kind of what's going on. So AMD just reported after the bell about 30 minutes ago, and this stock, last I checked, guys, was moving up, and it's still moving up. Look at this, guys. We closed at $91 a share. Now AMD is sitting at 95, so it's up $4 a share after the bell, or in other words, about 4.5% after the bell. And it doesn't look like it's slowing down. I mean, it did. It has come down a little bit from the initial pop. We went to about $97. Now, again, we're at 95. But we pulled back after that initial pop, and now bulls are bidding it up again. We're starting to rip back up again. So this looks very solid in the aftermarket, and they did EPS and revenue that is moving the stock up clearly. And their EPS, revenue, and their guidance kind of backs up this move, guys. They did adjusted EPS of $1.13 versus 91 cents estimated, so they crushed that. Revenue at $5.89 billion versus $5.52 billion. They beat that. And they see Q2 Q2 sales, right, of $2.03 to $2.13 billion versus $1.97. So they guided up for revenue for the next quarter. They double beat. That's fantastic. And let's see, are we getting out of the downtrend on the 4-hour chart? I doubt it. Yeah, we're not. We're not, guys. So even though AMD is doing very well after the bell right now, we're getting pretty close to $100 a share. It is not reversing quite yet in the grand scheme of things, right? It is still in this, multi-month downtrend. We're talking about a half a year at this point. If I pull up my channel tool, you guys can see we are well within this downwards channel. And I'm not saying that's necessarily a horrible thing. I'm just saying, that's where we are. And I guess the way we have to play it is, it was pretty oversold. And I mean, now that I'm looking at it, we might have already missed the move because it got to 82 to the bottom of the channel. Now we're starting to rip up towards 100. But if this thing pulls down a little bit, or even if it hovers around 90 to 95, the way we could play it is maybe try and catch it on a dip and ride it back to the top of the channel, whether that's $105 to $110 a share. That's right around this 180 moving average. And let's say that were to break, that is where the real reversal could start to occur. So AMD crushed earnings. What else can I say, guys? Solid, but it's not quite there yet in terms of the chart here. And Airbnb is one we got to talk about as well. This is one we called out recently when it was at about 160. I told you guys it's looking a bit bearish. It looks like we ended up being right on that because it went down 5% on the day, and they just reported numbers, and the stock's actually recovering pretty much that entire loss from the day today in the aftermarket hours, right? So Airbnb did EPS of -3 cents. They lost 3 cents a share versus -29 cents estimated. So they beat EPS by a long shot, and they beat revenue 1.51, guys, versus 1.45 billion. So they beat EPS, beat revenue, and their guidance is above the estimates here. They see Q2 revenue of 2.03 to 2.13. Wait a second. Did I read this wrong? I might have read it wrong, guys. If I said, I think I read the sales guidance for Airbnb sales guidance. I read it as AMD sales guidance. That was wrong, guys. I read it wrong. AMD sees Q2 sales of 6.3 to 6.7 billion versus 6.38. I'm not sure if I read that wrong. I feel like I did. But overall, guys, even though if I read it wrong, both of these companies, AMD and Airbnb, they double beat, and they guided up for the next quarter Q2 sales, which is fantastic. And looking at Airbnb's chart, if I pull up this 4-hour time frame, again, we are towards the bottom, or more towards the top actually, of this downwards channel. So this kind of scares me. Even though they did well, I would want to see it break out of 160 to 165, maybe even 170 before trying to play it. So the next one here is Starbucks. Let's try and not mess up these lines, guys, because I do have a bunch of notes here. Sometimes, you know how that goes. You read the wrong line, right? That's what I just did. So Starbucks, adjusted EPS of 59 cents versus 59 cents estimated. So right in line, in other words, with sales. They did sales of $7.64 billion versus $7.6 billion. So right in line on EPS, and they beat on revenue, which is solid. And the stock on the day went down 1.4%. And now after the bell, it does seem like it's up a little bit. Let's see here. It closed at 74.30. Now it's at 75.30. It is up 1.5% after the bell. So Starbucks is looking pretty beaten down. We all know that. China is a problem right now for Starbucks. They're having troubles over there. And, here, every Starbucks I go to is pretty packed, around my area. But just because that is the case, just because my Starbucks is packed, doesn't mean the company's doing well, overall. That's a misconception that people have. Let's say they live in a very wealthy community. I'm not saying that I do, but I live in a pretty decent area, right? But let's say you live in a nice, decent area and your economy is doing well in that area. It doesn't mean that it's like that everywhere, right, guys? So Starbucks is clearly having problems right now. The stock price reflects that. It's down a lot. We're talking 40%, 40+% in that area. So that's what's going on the stock's price. And in terms of, their earnings, let's see if we had any guidance. I didn't see any guidance. Let's see here. Global comparable store sales increased 7%. All right. Oh, I guess that's pretty good. Those increased 7% versus the 6.6% analyst estimate. Let's see here. Comparable store sales international, they decreased 8%, driven by a 5% decline in average ticket and 3% decline in comparable transactions. Yeah, I got to look deeper into that. Look at that, though. China. What did I say, guys? China comparable store sales decreased 23% for Starbucks, driven by a 20% decline in comparable transactions and a 4% decline in average ticket, which is crazy. So they're getting destroyed in China. I mean, they're getting derailed in China. I don't know how else to put it, guys. And the stock is just getting massacred. So at this point in time, I haven't looked at Starbucks, but like I mentioned, this is one that I've owned before and I sold out of it, and now it's down to where I initially owned it. So I haven't looked at it in a couple of months when it comes down to fundamentals, the numbers, the ratios, all that good stuff. So I got to do that. But if it gets under 70 into the 60s, I mean, that's going to be a point where I'm like, okay, we might be getting to a decent spot. I'm not saying it's going to be a bargain basement value, but I'm just saying it might be to the point where it's like, all right, now it's more, it's worth more to look into this, right? It's worth the time to look into this because it's getting to a very decreased, or not a decreased level. That's not the right way to put it. You guys know what I mean, right? We're at levels now that we haven't been at. We're actually in the levels or in the range that we were in during the March 2020 crash. Starbucks, during that crash, it went from $90 to $50. We're in the middle of that range, 90 to 50. We're at 75, right? Pretty much right in the middle, more towards the upper end, but you guys get the point, right? So I'm watching Starbucks. Lyft is another one, which right off the bat, Lyft and Uber, I have zero desire to invest in these companies, guys. I never see myself putting money into Lyft and Uber, but we're going to talk about them. We're going to talk about them either way. Well, in this case, in this video, we're going to talk about Lyft because they just reported and the stock is falling off a freaking cliff, guys. Look at this. We went down 2.3% on the day. closed at almost $31 per share, and now Lyft is trading under 25. It is down 20% after the bell on adjusted EPS of 7 cents with revenue of $875.6 million. And the funny thing is, that beat the estimate. The revenue estimate was $846 million estimated. So they beat revenue. And it seems like here the reason why the stock is nosediving is because on the conference call, this came out about 7 minutes prior to me filming, or not prior to me filming this video, just in real time when I'm filming this 7 minutes ago, right? They said on the conference call they see Q2 sales of $950 million to $1 billion versus the $1.02 billion. So that's a little bit under the estimate. And again, that came out 7 minutes ago. And since that point, literally 7 minutes ago, guys, the stock has cratered in the past 7 minutes, just about 12, 13 out of that 20%. So it was already falling, and then the conference call kicked in. Now it's getting worse. That's never a good sign, guys. You do not want to see that. You do not want to see a stock continuously going down as the conference call progresses. That's horrible, right? Usually, if a stock reports earnings and it goes down, during the conference call, or what am I trying to say here? Usually you want to see, in general, during the conference call, you want to see the stock climbing up because they're giving more clarity, giving more insight, yada, 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 right? The Q&A. So Lyft, I'm not touching it with a 10-foot pole at this point. Caesars is one that we got to look at, guys, which at this point is pretty much at break even after the bell, after going down 1% on the day. And they reported earnings that were not the best. 3.18 or negative rather, $3.18 versus negative $2.20 estimated. So they missed wildly on EPS, and revenue also missed 2.3 versus 2.34 billion estimated. And this is one that is not necessarily on my do not touch list like Lyft, but it's one that I'm not touching until it starts breaking out of these moving averages, guys, which as of now we are under both the 180 and the 50 on this 4-hour chart. So right now I'm going to put my alert at $75, and it might not hit for a couple of weeks, couple of months. I don't really care. All I know is that I'm putting my alert there, and when it does hit, I'll get notified because I'm on ThinkOrSwim every freaking day, and then we'll see what it does from there, and I'll make a plan accordingly, right? And if you guys do want to join my Patreon where I talk about all these stocks more in depth, I break down charts, do call outs, I post all my moves, what I'm doing in real time, use that link down below. Go to stocksforfest.com/Patreon, check it out, join it, and give it a shot. So Caesars, we're watching it. Skyworks Solutions is another one that just reported. They did adjusted EPS of $2.63, which came in line with the estimates. Revenue of $1.34 billion versus $1.33 billion. That beat by a little bit, and they see Q3 adjusted EPS of $2.36, which at the midpoint, which is at the midpoint of the range, right? The 236, adjusted EPS, which is what they're seeing, and that's versus the 255 estimate that the analysts are seeing. So that's under the estimate, and we have revenue estimates under, or revenue that they're expecting under the estimates as well. So they're looking to do 1.2 to 1.26 billion versus 1.3 billion estimated. So not a great report from Skyworks, and it looks like the stock's been killed in the past couple of months, and the stock's probably been pricing this in, guys, as it is down 35% in the past couple of months. Companies like Skyworks, they have been struggling as of late, and it clearly shows in the stock price, and it's so beaten down to the point where this bad earnings report with bad guidance is not pushing the stock down much lower. That goes to show it is getting the dog crap kicked out of it, right? So Skyworks is down after the bell a little bit. Watch out for that one tomorrow. And the last one for this video, make sure you guys smash the like button if you stuck on all throughout. I appreciate you guys. As always, the last one here is Marathon Petroleum, which went up 4% on the day. And I think I called this out. Where did I call it out? Was it on Patreon or was it on YouTube yesterday? I forget, guys. But I called this out recently. It was at 90.91. And now it took the highs out already, just like that. I think I said, watch for the highs from the end of April to break, or at least for us to go and test those highs. And we did that already. I think I called it out this morning. This morning it might have been when I talked about it. So this one is looking pretty solid. I think it's at an all-time high right now. I got to double check. Yeah, all-time high. We just hit it, and they did pretty well with earnings this morning, which is why the stock is running, or rather it ran up all day about 4%. We hit that new high. So they did EPS of $1.49 versus $1.11 estimated. Revenue of $38.38 billion versus $32.06 billion estimated. So they double beat. They crushed both EPS and revenue. And they have about $7 billion left under their share repurchase plan, which I'm assuming that's for the rest of this year. So what? We have about, we're almost halfway through this year, guys. That is unbelievable. I feel like 2022 has really flown by, or flew by, whatever, for the grammar Nazis out there. But yeah, I guess that's for the rest of this year. They have about $7 billion left under their share repurchase plan. So MPC, that's what I'm looking at. Watch out for this breakout to continue. And as always, guys, I appreciate you tuning in. If you liked the video, found value, all I ask is for you to hit the like button, subscribe, and I guess I ask a little bit more if you want some free money from Moomoo. Use that link down below. Deposit at least $100. You get up to 5 free shares of stock and a shot at a Twitter share, free Twitter share. Use that link down below. Again, deposit at least $100 and boom, you get your money. And with that being said, thanks for watching as always. Peace out.